Hi everyone, it's Evan here from the Trade Risk on Wednesday, March 22nd, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video with some sector analysis. So S&P 500 finished the day higher, just slightly up 0.23%, but the real news was yesterday we broke that streak of not having a 1% down day of over 100 days. That is in the record books. That is no longer in place as we fell by minus 1.28% yesterday, breaking through some key support levels. Let's take a look here at the weekly chart before we start looking at all those daily levels. You can see convincingly below the past 4 weeks of trading, below the 4-week lows, and we're trading at prices last seen February, call it 17th. So about a month or so, we've wiped out trading. Seems perfectly reasonable when you're looking at a time frame like this. Closing and testing the 8-period EMA on the weekly chart, which is something we haven't seen be tested since the election. If we go back down to the daily time frame, you can see 8 and 20 period moving average starting to curl over, starting to signal and confirm that sellers are in control with some downside momentum. And again, remember, S&P 500, the SPY ETF, did go ex-dividend recently, so you do want to look at the cash market SPX here to have some cleaner levels to work with. You can see here 23.55 approximately was the support from late February, mid-March, and that's what we just broke below yesterday. So where does that leave us going forward? What levels can we look at and sort of who's in control here? So the first point I would make, or the first observation, is that we actually do have a downtrend now in place here on the daily chart. If you take this high here, we have a lower high that we made just last week, and now we have this low here, and we have a lower low that we're working on right here. So it's mild, but we have the shape and form of a downtrend now here on the daily chart. Could it turn into a consolidation, a continuation pattern in the context of a bigger uptrend? Absolutely. But for now, we're going to respect the price structure that's in place here. As far as levels to look at on the downside, now that we're below 23.55, this is sort of the interesting part, and this is where markets become risky, is when they start to accelerate higher and just kind of levitate higher day after day, like we saw throughout the month of February, without spending a lot of time digesting and building out price structure and basing out and then breaking out again. You have a very sort of risky scenario when you start to pull back. There's not a whole lot of previous price levels in here, right? There's not a whole lot of price structure or some consolidations to work with. You really just have the breakout level back here at 2,300, which is, about 3% away from where we currently are. So if the sellers, really want to kind of step on the dial here, step on the gas, then it seems like this would be a good spot to really capitulate longs as, we don't have a whole lot of price structure in here. It seems like price could move pretty quickly through these levels. Now, the other thing we can do here, because we don't have a whole lot of price structure, this is generally one of the few times I'll kind of throw on fibs, and I'll just take a look at generally where we are. So you can see the lows from today, almost the 50% retracement. And again, I'm starting this from these from the end of February, beginning of February. You can see the 50% was almost tested today. 61.8 is down here around 23.17. So you can use that as some general guidelines, but really, again, 2,300 from a price structure would be the big sort of retest of the breakout, and then you have some of the 61.8, the 50% retraces you could sort of sneak in there. If we were to come back down and retest 2,300, that would be approximately a 4.5% pullback off of the highs. So completely reasonable pullback. If you think we were up, I believe 8 or 9%, maybe 8% here at the highs in the S&P 500 year to date. If we were to retrace 50% of them, 4% of that, gone away, retested, seems perfectly reasonable. So something to keep in mind. Not saying it has to go there, not saying we are going to go there, but just to give you sort of reference point and some guidelines and some waypoints if we continue to pull back. Now, on the upside, we really want to see support reclaimed. If you're a bull here, you want to see us get back above 23.55 as quick as possible and then start to, sort of solidify ourselves within this range. That would be the ideal bullish scenario. So otherwise, if that doesn't happen, then we're really, the pressure's on the bulls to put in a higher low somewhere, in the vicinity above 2,300. So whether or not it's where we are now, maybe we have to trade down to 2,200 and we start to go sideways in here and then start to lift higher. What we want to see though is some type of price structure, some type of confidence in a potential higher low before we get too aggressive putting on, new long exposure or just buying blindly. We do want to respect the break of support. We want to respect the newfound bearish momentum. So that's what I'd be waiting for. Reclaim of here of 23.55 or some type of sideways price structure or some type of, quick 2-day, 3-day capitulation. If we saw a huge kind of range expansion down, maybe that would be enough of a sort of a single day capitulation, something like we saw in the IWM. Maybe that would, start to get me a lot more interested in just buying there. So that's the way I'm looking at things. I don't think the world's coming to an end. There's, certainly no indication of that at this point. Internals have weakened up in here. That's been pretty clear. From a longer term perspective, though, everything seems to be intact. We're not seeing any major divergences on longer term scales. So I think, again, this is still a dip that I would want to be positioning long into. Where exactly, whether or not it's today, whether or not it's tomorrow down here or next week down here, that's the timing of it is sort of what, is going to be the tricky part. But ultimately, looking at dips as opportunities to still position long in, but don't want to get ahead of ourselves. So we are still long. We have a hedge on, so we have some long exposure, and then we just have SPXS, SPXL, I always get confused, SPXS. So we have a stake here as a hedge to our long positions, but we still have individual names that we're staying with, that are holding up, that are trying to show some relative strength, that are abiding by support levels. That's the way we're sort of looking at things and navigating the current environment. So that's the S&P 500. That's how we're playing it. The IWM, I think, is also very interesting here. This was, as we repeated, the sort of market to watch here for guidance or for sort of to dictate sort of the next market move. And we got a very, very clear signal yesterday with a almost minus 3% drop from 138 all the way down to 134. So again, I put out a post yesterday. It was sort of half comedic in nature, but really just with yesterday's session, we engulfed about 50 days of price action in here. If you were to take just the range from that single bar, we just ate about 50 or so days of trading in this range going back to December. So a pretty powerful candle. Happened really quick. Remember, we put out a post last week saying that, look, this was a bullish development here, that the IWM did have this little outside poke its head below 135. Then it had this nice strong close. And what we said basically coming into this week is it needs to hold above 138. 138, call it 137.50. That was the general area that the bulls needed to hold on to if they wanted to regain momentum. And you can see they danced around it for a few days and ultimately just gave it up in one quick swoosh yesterday, all the way back down to the lower end of this range. So IWM Russell, it's in trouble. It's clearly down here, testing and hanging on for dear life on this, what is this about? Certainly a multi-month range going back to almost December. So this is an important area. This is about the 20 period here on the weekly chart as well. If we start to break below 134, 133.50, then we have the pivot back, or we have the old highs over here at 129 and then 126. You have this little pivot in here around 130. So luckily for the IWM, there is some more sort of price structure not too far below current price levels. But that's still something that is at risk. There's some clear levels to use here if the sellers remain in control. And for me, that really occurs as long as it stays below 134. If the IWM stays below 134, then this is a seller's market in here, and you got to be careful. So that's the way I'd look at the IWM, and then the NASDAQ 100 continues to act the best out of everything. Yes, it did snap this trend line up here, this very fast accelerated trend line over the past month or so, but still, all things considered, above the 20 period, it's still holding up really well. So it doesn't mean it can't continue to, it could still very much unravel here. There's certainly risk off when it breaks this accelerated trend line, but on a relative strength basis, you could see just even on the percentage gain today, up 68 basis points, continues to hold a very sort of dominant spot here in the market. So that is the overall wrap up on the market environment. It's a spot to either reduce exposure, put on hedges, take notice, respect the potential downside momentum and the potential for some short-term capitulation. But again, it does not seem at this point like the world is coming to an end. It looks like a opportunity to potentially position long, and that's the way I'm still looking to view this, just trying to figure out the timing and navigating the timing. That's what we're looking for. So that's the averages. Let's look at some of the other major markets. TLT continues its push off of these lows here ever since undercutting and sort of double bottoming with the December lows. TLT has been working itself back up to the upper end of this range. Continues to work. Let's see if we can get a trade and retest of 122, but so far buyers in control here. If we go to UNG next, still kind of a messy chart. I don't have too much new to say about this. It's just been kind of this this short-term channel here off of these lows, but it's been it's been a little bit messy just to keep with it, but it's still holding up. So I mean, if you're in this, if you're playing it on the long side, it continues to work down 2.25% today, of course. But if it starts to break this trend line here below 720 and then below $7, then you have to be careful, as the weekly trend is still pretty much lower here, and you'd have to be a little bit cautious in UNG. So I'd still rather see a retest of these highs, just of these lows here, just to make sure that they're firm, they're good, they're worth buying on top of, and from there, that's sort of when I'd start to get interested. So that's UNG. USO, you can see, was getting hammered again today, but we did see a nice intraday reversal, close near the highs. This chart doesn't do a whole lot of justice because there has been a tremendous amount of drift within this range, but you can see this is a little more actionable if you're looking at the spot market, if you're looking at the futures contract, and we just put out a post on the trade risk to illustrate this, but there is a trend line here that coincides pretty nicely with the lows from April, so it's about a year-long trend line, and we're essentially testing it and bouncing off of it right now. So that'll be interesting to see if the long-term players, if there's enough demand in here, right around $47 a barrel, if there's enough demand in here to stabilize price. For now, the short-term momentum remains lower, so it's not necessarily an easy trade, an easy long in here, but it's something that could, just see a bounce if buyers are going to show up at the same kind of levels and magnitude that they showed up here in the past. So certainly something worth watching. Again, momentum to the downside, pick up in volume on this distribution down to these lows. So you do want to be cautious, but there is some prior price memory in here. Next, if we go to gold, GLD, you can see continues to work itself higher here as the markets have started to unravel the past few days. Just a little bit of a flea yesterday, acceleration higher, up almost 1% on the day, really above 116.50. That's where we want to see it stay above. So this higher low is potentially in place that we talked about in the prior videos. And silver, kind of the same thing. This higher low looks to be still confirming, still in place, and you can see price is stubbornly just kind of hanging up here and not giving anything back. So some good developments there in silver. I have to pay attention to it. Still don't see anything tremendously actionable, at least for my taste, my time frame and style. And I think that's everything. So with that, let's look at some of the individual sectors. The two leaders, nothing changed. I mean, XLK is still on a relative basis holding up extremely well. It did snap that accelerated trend line just like the Qs did, but still, again, on just a relative basis, XLK and semiconductors holding up tremendously well. You can see semis still above this trend line that extends from about the February lows or the beginning of February. So I think if we started to see a follow through, a second move lower below here, below 77.70, that's where I'd be concerned. XLV was a prior leader. This is starting to get dragged down just a little bit. You get a kind of a bad tick in here, but as we start to break below the $75 level, again, I think from a longer term perspective, there's a lot of charts here in healthcare that do look good. I know there's it's a controversial, or it's just a newsworthy item right now, depending on how all this policy and everything gets through, but that's something that we'll have to, we'll just have to wait and see. The price action, though, as it stands from a long-term perspective, continues to remain pretty constructive here for XLV. But in the short term, again, there's some damage, some momentum to the downside, so you want to respect it. But this is an area that I'd be wanting to position long into. Just trying to get the timing right is what we're waiting on. XLU. No surprise, is hanging pretty resilient. This is the defensive sectors as we might expect. Same thing with staples. Continue to hold up in a high tight base, not giving much back. It's XLF. This is the real laggard here. This is the cause for concern. This is where we saw a big slide yesterday, down 3%, which is big for the XLF, coming back into the multi-month, multi-week support, the lows of $23. So this is kind of the band of prior trading, of prior range that we were in, 23 to nearly 24. So now that we're in here, let's see if price can stabilize just a little bit. If we started to really collapse and kind of hot knife through 23, that would be a pretty big concern for the financials and, generally speaking, for the market as a whole. So we got to be careful of that. But so far, it looks like it's trying to catch its footing. XLE, we've talked about this for quite a while. This is still trying to catch its footing as well. Again, still got some short-term momentum in the seller's favor, but there's some long-term trend lines and support levels coinciding with the $69 to $70 level. So something to continue to pay attention to. And finally, materials, seeing a nice reversal today. It's kind of a messy range in here, but 51.60 to call it 52.85. You can refine those levels as you wish, but you can see a little bit of a reversal, trying to hang on to these lows here from February. Maybe just need some more time. Maybe this is a good low to trade against if you're tactical. Otherwise, the lows from today would be a good sort of risk-off point, or point to maybe press on some shorts. So that's XLB, and I think that is the wrap up on sectors on the video. Hopefully you guys enjoyed. Hopefully you had a good day trading. If you like these videos, make sure you do subscribe to our channel. Otherwise, thank you so much for watching, and talk to you again soon.